What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be going over the charts, looking at the Dow pre-markets. Then we're going to look at Bitcoin, smaller time frames up into the bigger time frames. Then we'll take a look at Ethereum, LITECOIN, the Dow Jones, and the DXY, and see what's going on. You guys know my opinion if you watch this channel. If not, make sure you subscribe. Tick that notification bell to get you notified when I post new videos. Leave your comments down below and share the video. Get it out there. You need to smash the likes to help other people be able to view these videos. Anyways, looking at the Dow futures, we're down 349 points. Pre-market down 50 on the S&P, down 184 on the NASDAQ. Let's take a look at the weekly Bitcoin chart. Just a clean chart. As you guys know, I've been talking about this right here, getting rejected on the RSI, going to come down. Looks like that's probably going to happen this week, if not this weekend. Have a close below here on the weekly RSI. If not, then we'll visit that again afterwards. But as you can see, everything is looking extremely bearish right now on the weekly. If we take a look at the monthly, same thing. We had the 8 EMA cross the 55 here. That's pretty damn bearish, guys. Also, let's take a look at the 4-hour real quick. So we talked about this over and over. Before we get into that, I want to show you guys 2 days ago, early in the morning, I posted this. Remember I was in a short. I got stopped out at 17.6 for a small loss. Bitcoin, I have started laddering in shorts at 17.9, and I will continue to do so until 18.4. That's exactly what I did. I'm in a pretty healthy short position now. I laddered in from 17.9 all the way up to my last entry was 18.4, exactly where it got rejected. We're going to take a look at how that all went together. If you guys don't follow me on Twitter, give me a follow. It's at CryptoSavvy1. Right here, it's just one word and then the number 1, no underscore, no nothing. Taking a look at the 4-hour, right? So we were looking at this rising channel. We got a little wick above. I consider that a bull trap, exit liquidity grab, and coming back down. We'll probably come down, maybe bounce around on this on the RSI down here, somewhere around the 17.2, 17.3 range. Once that breaks, our next stop is going to be around this 16.2. This is probably going to take some time to play out, although we could have a major capitulation, but we'll be keeping an eye on this. Once we break the 15.2, 15.3 range, I'm still looking for that 14.5 for a bounce. If that does not bounce there, we could go as low as that 12.5, that just being a measured move of this whole channel right here. Let me put it on there. We got a wick above, but that would get us down to this range, around the 12.5 or so. But look for a bounce around that 14.5. And as you guys know, this is a chart. I haven't changed this. Ever since we broke over here, I've been talking about coming back up to possibly hit that 18.4, right? That's exactly what we did. Now, could we get another pop up here if the Dow rallies today? Possibly get another wick up to this range and come back down. But nevertheless, it's looking pretty bearish. As you can see here, this blue trend line, I told you we could come up to retest that, which we have. Now, if we zoom in there, there is still room to come up and retest it a little bit higher. But what I want to do is come off of these lows here. If I do that, then we have got rejected right here. So chances are we continue down from here, guys. We've been talking about the RSI on the daily coming all the way back down to test this trend line, which I do think we're going to do. That could be around that 14.5 range and get our bounce. I'll talk about the time frames and everything here in a minute. When I think it's going to hit certain targets and where it's going to go from there, and why I believe I have a 10-year plan for Bitcoin. At the end of the video, you're going to want to watch. We've had this map drawn out since December 2nd, 2021, so well over a year. Let's take a look at that at the end. But first, if you guys are interested in trading, definitely check out Prime XBT, by far my favorite exchange. They don't trade against you. You can trade gold, silver, forex, crypto, S&P, Dow Jones, pre-markets, post-markets, all from one exchange. They don't trade against you guys like the other scam exchanges with the huge scam wicks and whatnot. You can have multiple trades in, longs and shorts, multiple assets all at the same time without them clumping them all together like the garbage exchanges. Definitely check them out. Links down below. They do help support the channel. So by you using them, if you are trading, it does help support the channel. So yeah, check them out, guys. You can use my promo code Savvy50. That'll get you up to a $7,000 bonus. Savvy25 will get you 25% off of your fees. Definitely check them out. I'll leave a tutorial at the end of the video up top, so watch for that. But anyways, looking at the monthly, we've been talking about this monthly trend line here. So everybody's been talking about the bullish divergence on the weekly, right? Guys, Bitcoin's been around a lot longer now. Look at the monthly. The monthly is bearish, extremely bearish. Be careful. And let's take a look. So this is kind of my time frame, right? We've had this drawn in for a couple months, right? Just coming down. Could this have been that 14.5, 14.7, and we just didn't quite get there that I've been looking for? You see how I drew it in here? This could be it and come down from here, right? Getting us down as low as 85.81, but I still think we'll possibly stay in this area until, you know, January or February before breaking this low. Once we break this low, I think we go down to 85 to 9,500 range for February or March. Get a big bounce there. It'll look huge. It'll be a big rally. Everyone will call for the bottom again. Would be a good time to get some Bitcoin at 75 to 8,500 range. Maybe ride it up for 100% gain and then see how it reacts here once it gets back up to this 14.7 to 15,000 range. Possibly start selling some profit there and for a continuation down. As you guys know, I think the bottom's going to be sometime in the middle or end of next year. I still believe that. I'll show you why in the longer term chart. But one more thing, this is my wife's webpage, anchorimage.com. Definitely check it out. A lot of cool Christmas gift ideas. She does. This is the hottest seller, the Divergence cheat sheet mouse pad. A lot of people get confused with Divergence, so this would help you out. You can lay it right by your computer. Definitely check that out. She can put anything you want on any of this stuff. Anyways, let's get into it. So Binance, as you guys know, I think Binance is in serious trouble. And is that saying that I know something special? Not at all. But what I do know is how the charts look. And as you can see, I'll show you Ethereum's doing the same thing. They're all doing the same thing. But can Binance handle this? That's the question. It does look like Binance is about to crash within the next coming months. That might come in the January, February area. Maybe not until, you know, the rebound around March or April. But definitely watch for this, guys. This does look very bad for Binance. And can it handle it? I don't know, but it doesn't look good. I would be very careful with Binance, guys. So Ethereum, same thing. You can see that same bubble pop pattern in Ethereum, right? We've had these targets for a while, 926, 280. If it really crashes, down to 19, 20 bucks. These are measured moves, guys. This chart is about 1.5 years old of Ethereum, right? So we had this target down here from this breakdown. We nailed it. Now that became resistance. Then we look at our next targets. So our next target is around $700 to $800 range off of this break. Still think we're headed here. If these lows break, then we're looking at about $200 to $250 Ethereum right here. Litecoin, same thing. This chart is extremely old, guys. You can check all my old videos. We have a target of 25 as my main target. If this breaks up from here, you know, and we do have one big Santa rally, we could get up to this range, but it's not looking likely in my opinion. Looks like we're possibly going to be headed back down. We have a measured move of this rising broadening wedge here, getting us down to as low as 10 to 12 bucks, guys. We pointed out this hidden bearish divergence here, or I'm sorry, bearish divergence with higher highs in the price action, lower highs in the RSI, that is bearish divergence. The Dow. So the Dow, as you guys know, if we go into the daily here, we had this target for the Dow for probably about, I don't know, 3 weeks now, and we nailed it, which is at 1618 here, the golden pocket zone. I said we'd probably go down from there. It does look like it is. If we break this high, we've talked about this also, possibly getting back up to retest this trend line on the daily, but I don't think it'll make a new all-time high at all. The highest it would go would be up in this 3,500 range, 35.5, somewhere in there, but it's not looking very likely, guys. It's looking like this thing has turned around and is going to continue to the downside. So be cautious, be careful. We have some very low targets for the Dow. As you guys know, I think we're witnessing, and I've been talking about it for a year, the biggest money grab in history in all markets, right? We've talked about how everything goes down when the markets crash historically. Everything but the DXY. The DXY is the only thing that rises. Gold goes down, silver goes down, oil goes down, everything goes down. That's how they take your money. As you can see, here was the 2008 crash for the Dow, and you know what happened to everything else in there. The DXY, as you guys know, I'm still extremely bullish on the DXY. Long term, I think the DXY is going way, way up. My first point of resistance has been, still is, 122 range. As you can see, the DXY rose in 2008. Only asset that rose. And the 80s. I think we're going to see something like the 80s here. I've been showing this for over a year, well over a year. Rising, broadening, or I'm sorry, falling wedge. We broke out here. Gets us a target of 170 to 180, guys. Still looking for that, but we'll see what happens here at 122. If we get above 122 and get support there, guys, I think this is huge, very huge. All right, so this is the chart. I started talking about this and made a video on December 2nd, 2021, last year, over a year ago. No one wanted to pay attention. Those that did made a lot of money. But I talked about the .com bubble Amazon chart over here. It was making the same structures. And people say, but it made 3 highs. 1 high, 2 high, 3 high. You can see this pump right here. All these timings are the same. This one didn't just didn't get as high. Same thing though. There's your first high, second high, third high, right? Boom. Playing out beautifully, guys. And I warned you that you would have pumps in here all the way down. So, right, we had this first drop. Everyone got super bearish. And then what would happen? You would get a rally up. Everybody wished they would have sold up here. So then they get a rally up. They get all bullish again, only to make it a lower low. Each rally, you get scared to sell because you think it's going to new all-time highs. But it isn't. I still think we're coming down. We're going to have a false bottom sometime in February or March, down to the 75 to 8,500, possibly lower. Get a 100% rally up to 12, 14,000 range sometime in April, March, April, May area, and then our final capitulation down, ending at around 35 to 4,500. I've had this target since December 2nd, 2021. I still think there's a very good possibility we get here. And what would invalidate that? Well, if we cross this 55 EMA. Once we cross over that 55 EMA and get support, then I'd say the bottom is in. I would much rather wait for these lows than to buy in now at what, 17.5 and then go all the way to 3,000 and lose all that capital, when I could just wait until this 55 EMA is broken, then put my capital in, and I don't have any less money than I had, and it continues up from there, and I make some money. Where will it go? Well, if I'm correct, you can see what happened in the Amazon chart right here in blue, overlay it on Bitcoin. Timing is the exact same, guys, on the weekly. It's the exact same. So if that does play out, we can get our low over here, which would be our 35 to 4,500, middle or end of 2023, get our halving cycle rally, which you guys know my thoughts on that. If you don't, if you're new here, go back and watch the videos. Guys, before we continue, make sure you smash those likes. But that would get us a rally up to, that's a 10x, from 35 to 45K up to 35 to maybe 40K. Middle or end of 2025, everyone would be expecting new all-time highs. Get another crash back down to 14 to 20,000 mid 2028. This is a 10-year plan, guys. As you can see, the Amazon chart took 10 years to break the all-time high, right? Same thing I think is going to happen here. There's going to be a lot of confusion in here, a lot of news. You guys know I'm not a big fan of the news. It's kind of amazing that the rate hike was announced right at our top that we've been looking for at 18.4 forever. Guys, it's all in the charts. News is noise. That's why I don't flood my brain or yours with news. The more you watch the news and stuff, that's what creates FOMO, hype, and all the crazy stuff that makes you get confused in the markets. Also, you don't see me using a lot of crazy indicators or putting a bunch of indicators together. That's mass confusion. Stick to 1 to 2 indicators and learn them, and you will be much better off than paying for these garbage indicators that put a bunch of stuff together just to confuse you. Nothing is 100%. So if you master just a few, you'll do a whole lot better trading than buying these indicators with a bunch of confusing crap all over them. So be careful out there, guys. Much love. Thank you all for subscribing. If you subscribed, if you haven't, make sure you do that. Smash those thumbs up. Leave your comments below. Let me know what you think, and I'm out.